Hello and welcome to Business Lunch. I'm Nisha Podar and with me as always is my co-anchor Pavitra Parekh. Well, let's begin with a quick look at the markets, and when it opened today, it looked like it's going to be a great day of trade like yesterday, 0.5% up in trade, but then it is exactly the opposite at the moment at lunch hour. So almost 0.5% down on both Sensex as well as Nifty, and Bank Nifty, which remember showed a lot of momentum earlier part of the day, is now beaten down 0.26%, still outperforming the key indices, I would say. And the mid caps are the ones which are outliers, still in the green, and 0.28% high up in trade. And advanced decline ratio, therefore, no consolation. It's still in the favor of declines, but with broader market looking slightly better, the gap between the advances and declines is not as wide as the key indices have been showcasing. Some of the auto counters like Maruti, Eicher Motors, M&M are the ones which have a green tick, but overall there is a fair bit of weakness that we are seeing in the heavyweights, and Nifty 50 has, remember, come below the 18,000 level that it had conquered, and about 180 points lower than the high point of the day as well.
Oh, absolutely. We've definitely seen quite a slip from the opening levels, 170 points, as Nisha pointed out. But, you know, this comes after days and days of momentum. Even on the Nifty Bank, in fact, we've seen from the highs a 500-point cut. But remember, if you take a look at what's going on with the Nifty Bank for, you know, a 1 month period, it's up almost 6%. So I don't think we can really complain about that. In individual counters, they're quite split. So take a look at SBI, ICICI Bank. These ones will come up for you, and they're holding up in the green for now. They're also off the lows. While on the downside, you have something like an IndusInd, Axis, Kotak, all of these exerting some pressure. Auto stocks good, like Nisha pointed out. On the downside, it is really tech, which once again continues to bear the brunt. So Infi, HCL, Tech Mahindra, all of those seeing some cuts. Remember, this is after the 3% drop that we saw yesterday. And it is also the pharma pack with something like a Phoenix Mills down 5%. So do keep your eye out on the pharma and then real estate pack as well. Phoenix Mills from the real estate pack, and pharma has some of the larger names which were up for you. So that's what's going on with the market action. We'll keep coming back to this. But first up, let's talk about some individual stocks which are moving around. PVR is one such. It's under pressure on the back of a large block deal. Nimesh is here with the details on this one. Nimesh.
So there is a confirmation that 7.7% equity has changed hands in a block deal. So clutch of private equity investors sold 7.5% stake, which is around 47 lakh shares at an average price of 1891, a close to 2.5% discount to yesterday's closing price. Now, in terms of buyers, the feedback from the bankers is, 80% of the book was built by long only funds, 20% by hedge funds, and within the 80% of long only funds, there was a 50% participation from domestic mutual funds. And I believe one of the domestic, mutual fund was an anchor investor as well. So the book was well bid by long only funds, but the fact that 7% equity, 7.5% equity got sold at a discount, and that's why there is a bit of pressure on that particular stock. Remember, the institutional holding is quite high in PVR, close to 83%. So it's largely a shift from private equity investors to clutch of domestic and FIs. But the fact that Ps have started selling, there is a bit of pressure in today's trade, and also the fact that there is a bit of discount as well in the block. So, but overall feedback is well bid by long only funds as well as some domestic mutual funds as well.
All right, more than 4% down on PVR there. Thanks so much, Nimesh, for filling us in with those informations. And now next counter on our radar is KEC International, which is trading in the green on the back of some optimistic management commentary coming in. In fact, company tells CNBC-TV18 that they do expect to clock in a double-digit margin in FY24. Let's hear out a word from the MD and CEO of the company, Vimal Kejriwal.
So as far as Brazil is concerned, all our legacy projects will get over by October or max, let's say 15 November or so. So Q2 and maximum Q3 would be the last quarter where we would see a negative impact from Brazil coming in. So Q4 onwards, I think we have a good book in Brazil on supplies. So it will start turning positive from that. Q2 would remain at a similar level to Q1. Q3 will start improving, maybe 50, 60 basis points, 70 basis points. It will to depend more on how much we are able to fast track execution of the newer projects other than Brazil. Q4, maybe another 100 basis points. And what we have been generally talking about is from FY24, we should inch back towards our normal double-digit margins.
All right, that is the management of KEC. Order inflows are looking good. Margins should be back at double-digit levels by FY24, and the stock is up 4% on all of those comments. But shifting focus to an exclusive now, sources are telling us that the insurance behemoth LIC is mulling its own depository for insurance dematerialization. My colleague Yash Jain is picking up all of this exclusive information and joins us with the details. Yash.
Well, last entire week, we at CNBC-TV18 have spoken about how insurance dematerialization will be a big opportunity for various depositories, and the largest life insurance company, that is LIC, has looked at that very opportunity. What we've been given to understand from our sources is that LIC is considering starting its own depository service, which would be for the purpose of dematerialization of insurance policies. This will be a separate subsidiary under LIC for the purpose, as I said, of dematerialization of insurance policies. And the talks regarding this thing between LIC and the insurance regulator are expected to happen very, very soon. As far as the timeline from the insurance regulator is concerned, IRDAI has said that by December 2022, that is December of this year, all new policies will have to be issued in DMAT form, and a year after that, that is by December 2023, all old and existing policies will have to be brought on the DMAT platform. That's the timeline, and that's exactly what LIC has also been working with. As far as the expense incurred on dematerialization of policies for LIC is concerned, LIC has around 75% market share when it comes to total insurance policies in the industry. It issues nearly 2 crore policies each year. Also, there are 22 crore policies which are active and existing belonging to LIC in the industry today. So if this was to be done through a different subsidiary, let's say a CAMS or NSDL or CDSL, then LIC would have incurred around 1200 to 1400 crore on dematerialization of policies. But now that money will be coming to its own subsidiary if this insurance depository comes into existence before this particular timeline. Also, because it's your own subsidiary, it would also be allowed to take dematerialization business from other life insurance companies and other insurance companies. Also, the cost for LIC itself could come down since it's your own vertical doing the work of dematerialization for the company.
All right. Thanks so much, Yash, for getting us all those important details. Dematerialization is going to be a game changer for the insurance sector in India. With that, we'll slip into a short breather on Business Lunch. But up next, Food Secretary Sudhanshu Pandey defends India's decision to restrict rice exports. More on that after a very short break.